When is the best time to sell a stock? That's a difficult question. Most investors find it far harder to determine when to sell a stock than it is to buy a stock. When you find a stock you want to buy, you tend to feel like a particular stock has a very bright future. They have a very strong moat. They may be discounted and just really give you a strong reason to buy that stock. And you buy it. In most cases, you intend on holding it for a long time. And in value investing, there's, I think, a saying that I think goes too far, that you buy stocks and you hold them forever. And I just think that's misleading. And I'll give you one solid example. The great Warren Buffett, arguably the greatest value investor in history, just decided to sell his Paramount stock. He started investing in Paramount and felt that he was getting a very good value, a very good discount on a company that owns intellectual property rights, movies, media. Their library is quite valuable. But that same company has a lot of debt. What Warren Buffett disclosed not too long ago was that his evaluation of the company didn't take into account everything, and he made some mistakes. Now, it's Warren Buffett. He's made so many brilliant investments that it is really great to see a person of his caliber go through one of the errors he made on a company that he invested in, and he decided to sell Paramount. So the whole notion of you buy a stock and hold it forever, it's kind of nonsense in my opinion. I evaluate companies that I own at least twice a quarter, and not necessarily with the intent to sell it, but really it's just to see that the business is still operating really well. I want to know, has new competition entered the picture? Just a lot of the variables can come into the picture, and I want to be aware of them. I'm putting my hard-earned money into a stock, so I want to make sure that it's performing well. But it is very difficult to pull the trigger on selling a stock. It's far harder. The mentality, the emotions, the psychology is pretty interesting. We really enjoy having, especially a stock winner in our portfolio, because we can look at it and be proud. Hey, great, I'm up a giant amount on this stock. And sometimes when we have a loser, we really want that stock to come up in value. That way it could really prove out the thesis we had originally. Nonetheless, I think being a smart and successful investor includes having very good discipline about selling stocks. At what points would I be selling a stock? That's what I'm going to cover for the remainder of the video. Just putting out some examples that I've learned by investing. And it really comes with some recommendations with other great investors like Pat Dorsey. I just finished his book, and it was a brilliant book, brilliant investor. And I really like how he puts the selling of stocks. And he really phrases it by saying that you cannot be a good investor unless you know when to sell your stocks. So I'm going to go through and point out some of the reasons why I would sell a stock and some of the stocks that I have sold. In some cases, I was really glad that I sold them. In some cases, I'm a little bit sour because the stocks continue to go up. But what are you going to do? It's never going to be a perfect recipe for success. But overall, I'm having a great year. And overall, I continue to grow my net worth. So I'll take it. I'll continue to act the way that I think I should be to continue to create value for my portfolio. So let's get into those reasons. Before I jump into that, let me just tell you about my sponsor, Moomoo. They sponsor my channel, and I'm very grateful to them for that. They are offering new account holders an 8.1 introductory rate, 8.1% on your cash, which is really attractive. And then they'll pay 5.1 after 3 months. They'll also provide 15 free stocks if you deposit $1,000 or more. Pretty strong offer. And if you're interested, take a look at the video details and you can find a link to get to that offer. The first reason that I'll talk about is that my thesis, my expectations of a particular stock and the underlying company was wrong. I expected a company to have a particular value based on their free cash flows, their earnings. I expected a growth rate. I expected industry factors to play out in a different way. And I realized maybe a year or 2 years down the road that my thesis was not correct. There's an opportunity for me to learn something there. And how did I go about estimating those expectations? How did I go through, expecting a particular growth rate? And what interrupted that growth? Was it something that was unforeseen, or was it something that I should have seen? And I can learn something and become a better investor. So I'm not going to get every single investment right. But when I realized that I had the wrong thesis on a stock, I should get out of that stock. The next reason is quite positive. I buy a stock and the value goes well above the expected value of that company. For example, I owned TSM for several years, a few years back, and the stock was up 200% from the time I bought it. It was a great success. I put a lot of capital into TSM, and they got well above the intrinsic value that I calculated in the company. And I sold the stock. I sold every share that I owned and took the gain, which was very satisfying. That was before 2022. And in 2022, it seemed like just about every company went down with a few exceptions, but especially semiconductor companies. And I had about $100,000 invested in TSM. I preserved a lot of capital with that sale. So that's one of the main reasons is to sell once a stock has eclipsed the intrinsic value by a significant margin. For example, at certain times, Meta has been above what I think is their intrinsic value. Not too much, but Meta is one of those stocks where I do want to keep that stock. They would really have to really be way overpriced for me to sell it, but that is possible. The other company is Uber. I really like Uber. I think for a lot of reasons, I want to be a stockholder, and they've been priced a little too high at times and have kept those shares. But if Uber gets overly expensive, I'll be selling that stock. The next reason I would sell a stock is that new opportunities have come up that really look great, and they look far better than a particular stock that I own, or maybe a set of stocks. An example might be real estate. At times I've invested in real estate. I've tried to pick the right times. And to invest in real estate, it takes a lot of capital. So it may be a good reason to sell out of a position, might be selling it at a modest gain or a modest loss. But I take that capital and move it to a place that I think is going to be better for the next couple of years. So that's another reason is, hey, I want to invest in a great opportunity that's presented to me in the current year. When you hold a stock for a long time, chances are that new competitors will enter that industry, and maybe even a disruptive company might enter the picture. So if I own a stock and that company now has a very strong competitor, that might change my outlook for the company. I might trim back the revenue growth. And if it's a disruptor coming into their space, I have to look at that closely, because in the near term, it may not affect their revenues, but over the long term, it may really damage the company that I'm invested in. I got to be looking out for disruptive companies that would be competitors to a company that I own. If that's the case where I see a clear disruptor enter the picture, I would probably sell that stock. And the final example I'll provide is when a company begins to operate much worse than expected. And it's really a signal that the management team, or maybe the products aren't as good as I thought. The business is a lot harder than I thought. The competitors are much stronger than I realized. And the operations and the performance in the company are just really, really bad. Warren Buffett just sold Paramount, and that's a good example where that company, their balance sheet, terrible. They weren't growing their business. Just a lot of things were systematic or symptoms of a company that's just really in bad shape. And it's going to take a while for them to get back to potentially being a really great company again. So when a company really begins to operate in a very poor way, I need to really look at that stock and look at selling it. If I don't believe in the management team and I don't believe in the company and their products and what their mission statement is and their growth rate, I need to get that stock out of my portfolio. So those are the reasons why I would sell. And I would encourage you to think about what is going to be your process to sell stocks, because you're not a successful investor until you ring the cash register and you take that gain. If you have gains that are just paper gains that are a number on a screen, that's great. But really, the proof is in taking those gains and really collecting the money on that investment. I sold a real estate property, not too long ago, and I took a huge gain. Very satisfying. And I put that money to work in other investments. But that investment, the numbers that I was seeing as a gain, it didn't count until I rang the cash register and took that big gain. So that's how I measure my performance. And that encourage you to think about when you're going to sell and sell at a good time. Determining when to sell a stock might be harder than finding a stock to buy. I started the video saying that, and it could be. So there's needs to be a discipline about when to sell and really exercise that discipline. Holding on to stocks too long sometimes is very, very painful and expensive. And I'm glad that I've exercised my selling muscle at the right times on some stocks. Sometimes I've probably exercised it a little too early, sometimes a little too late. But I'm glad that I'm an active investor and really look for an exit strategy in all the positions in my portfolio. So I hope you found my video interesting, and I really hope you found it interesting.